and welcome back to this YouTube channel. As you know, or if you are the first time visitor of this channel, I had started from last 1 month the current affairs of our important subjects, which could be asked of the important subjects for our films, and I had brought the most important current affairs of the various subjects uh, like the polity and governance. Then I brought it for international relations. Now I'm taking up the Indian economy part. As you could see here, this is the third lecture related to Indian economy. So I would try to, take up some important topics which were in the news from last 1.5 year. So if you don't know, I had started these newses, these topics, they were in news. I had taken it from last year's March, from the month of the March of 2023. So you should know that these PPTs were made then. So if any news would come up here, any topic would come up here, maybe I would not take up the for whole topic in detail. As in upcoming classes, I would take up the remaining developments which had happened. So, with this regard, let us start our first topic of today's discussion. It is the Competition Amendment Act 2023. Before we go to the topic, the aim of these classes is not to go to detail about the topic. you know I presume that if you are the serious aspirant, that you would had understood these topics already in the classes only, when you study, or if you are doing the comprehensive reading of the books, you would had understood these concepts. So I would not explain these concepts in detail. I would just point out the important events which had happened, which could be asked in the exam. So, without wasting any time, let's jump to the topic. As we could see here, Competition Amendment Act 2023. So, a little bit I would like to discuss it here, that the Competition Amendment Act, or we can say, or the Competition Commission of India, what is the purpose of it? The main purpose of this is to avoid the monopolies of the company, so that the equitable growth, their competition would be there in the market. Different companies would work there, they would do their business, and with that regard, that the market will grow, the economy will grow. The main purpose is to curb the monopolies of the companies. So let us see what this PPT gives us. Here we can see that the central notified several provisions of the Competition Amendment Act 2023, which which amended the Competition Act 2002. Moving forward, about the Competition Act 2002, what it does, when it came, why it came, and what was the purpose. It replaced the Monopolies and Restrictive Trade Practices Act 1969. Before the Competition Act, we have this Monopolies and Restrictive Trade Act 1969. Its aim was to curb the monopolies of the companies. It provided for the establishment of the Competition Commission of India. This Competition Act 2002. This provided for the establishment of the Competition Commission of India. About this, we would take a few basic points in the upcoming slides. The act, we could see here that the act forbids, it stops anti-competitive agreements, corporate abuse of dominant position, and combinations, including acquisition, takeover of control, and mergers and acquisitions that have or are likely to have a materially negative impact on competition in India. So it forbids these anti-competitive acts, like dominant position of any of any company, or we could say of any corporate, or acquisition or takeover of controls or mergers. So it does prevent these things. About the amendment, this amended various definitions in the act. We can see definition of combination according to the this competition amendment act. It expands the definition of the combination mergers, for example acquisitions or amalgamation of enterprises to include transactions with a value above rupees 2000 crore, and also reduction in the time limit for approval of combinations from as earlier it was 210 days to it has been reduced to 150 days. The Competition Commission of India is now required to form a prime facie opinion on combination within 30 days, otherwise the combination shall be deemed to have been approved. Definition of control for classification of combination, as we can see it here, the competition amendment act modifies the definition of control as the ability to exercise material influence over management affairs and strategic commercial decisions. And also we can see here that the expansion of scope of cartels to include hub and spoke arrangements. Companies which are not engaged in identical or similar business activities can also be held liable for an anti-competitive horizontal agreement, which is cartelization, where they participate or intend to participate in facilitating such an agreement. So, in broader terms, what we understand from here that the definition of combination has been expanded. It has included transactions with a value above rupees 2000 crore. Reduction in the time limit for approval of combination has been reduced from 210 to 150 days, and the Competition Commission of India has to take the prime facie opinion on the combination within 30 days. And definition of control for classification of combination, as we can see it here, the definition of control as the ability to exercise material influence over management affairs or strategic commercial decisions. What is the grievance? And further, we have grievance redressal and penalty provisions. Limitation period for filing information. A complaint against anti-competitive conduct needs to be filed before the Competition Commission of India within 3 years from the date on which the cause of action arose. The Competition Commission of India is empowered to condone delays, also increased penalty for false statements, omission of material information from 1 crore to 5 crore, and also penalty based on a global turnover. The penalties for anti-competitive agreements and abuse of dominant position would be imposed based on the global turnover derived from all products and services by such person or an enterprise. And also we can see from here that there is a term compounding of offense. The Competition Amendment Act, it introduces a provision which allows the compounding of any offense which does not entail imprisonment. Compounding an offense indicates that the individual with whom the crime has been perpetrated has acquired some compensation from the accused, not which may not be exclusively in monetary nature, to avoid the litigation process. And we have also this leniency regime where a party implicated in a cartel investigation make a true and vital disclosure of an alleged violation or another undisclosed cartel. Competition Commission of India is empowered to also grant an additional lesser penalty for the cartel already being investigated. Then we have decriminalization of certain offenses, and this amendment changes the nature of punishment for certain offenses from the imprisonment of and to fines, uh, from the imposition of fines to penalties. These offences include failure to comply with the orders of the Competition Commission of India and directions of the Director General with regard to anti-competitive agreements and abuse of dominant position. About the Competition Commission of India, we should know that it is a statutory body. It was created via the Competition Act 2002. Its mandate is about mandate. It is the duty of the Commission to eliminate practices having adverse effect on competition, promote and sustain competition, protect the interests of consumers, and ensure freedom of trade in the market of India. It is under the Ministry of Corporate Affairs. About the composition, it has chairman and at least two to maximum six other members to be appointed by the central government. About the term of office of a chairman and members is 5 years or the age till they reach the age of 65, whichever is earlier, and they are also eligible for the reappointment. About the powers, the Commission can inquire into certain agreements, combinations, and dominant positions of the enterprise. It can regulate its own procedure and amend its orders to rectify any mistakes. Failure to follow Commission's orders or directions can result in fine or imprisonment. So this was about the Competition Commission of India. These points are very important. They are very factual, and such questions do come in the exam. They may ask you like that: which of the following is the statutory body? They may ask different options, and one of the options would be the Competition Commission of India. Moving forward, what are the other provisions of the this amendment, Competition Amendment Act? We have settlement and commitment mechanisms under the amendment. Competition Commission of India may initiate proceedings against enterprises on grounds of entering into anti-competitive agreements. Agreement permit this amendment permits Competition Commission of India to close inquiry proceedings if the enterprise offers settlements. They may involve payment or commitments, may be structural or behavioral. Then about the implementation of open offer purchase of shares. This amendment permits the implementation of an open offer or acquisition of shares or securities through transactions on a regulated stock exchange before Competition Commission of India's approval. The acquirer would be allowed to acquire shares but not exercise any ownership or beneficial rights or voting rights or receive dividends, any other distributions till the Competition Commission of India approves such acquisition. About the appointment of Director General, as per the amendment, the Director General shall now be appointed by the Competition Commission of India with prior approval of the central government, as against the earlier power being vested with the central government only. Now, we have another important topic, which is the transition from London Interbank Offered Rate LIBOR. You know about LIBOR. Usually, how for banks, do business with the foreign banks. They have this LIBOR rate. Where this LIBOR rate they used to do the businesses. They used to give loans to each other. So now in 2017, the London itself, England itself struck it down, and now we are also transitioning away from it. Let us discuss more about it. The Reserve Bank of India, they has issued an advisory to banks and other RBI regulated entities, asking them to take steps to ensure a complete transition away from London Interbank Offered Rate, which is abbreviated as LIBOR, from July 1st. About LIBOR and the Mumbai Interbank Forward outright rate, they will be phased out by June 30. This Mumbai Interbank Forward Outright Rate, it is a domestic interest rate benchmark, is presently published by Financial Benchmarks India Private Limited. This Mumbai Interbank Forward Outright Rate, it is presented it is presently published by Financial Benchmarks India Private Limited. About banks, financial institutions have been advised to ensure that no new transactions undertaken by them or their customers rely on or are priced using the US dollar LIBOR or Mumbai Interbank Forward Outright Rate, which is MIFOR. The global transition from LIBOR was necessitated after British financial authorities decided to phase it out in 2017 after discovering that some large banks manipulate the reference rate up or down by providing false data. About LIBOR, it is a benchmark LIBOR is a global benchmark interest rate at which major global banks lend to one another in the international interbank market for short-term loans. It was for short-term loans. Regulations prior to 2014, LIBOR was administered by the British Bankers Association. Later, the maintenance of the benchmark was brought under purview of the UK Financial Conduct Authority. About calculations before December 31st, 2021, LIBOR it was calculated for five currencies: US dollar, Euro, Pound, Swiss franc, and Japanese yen for 7 tenors. After announced its phased rollback in March 2021, only US dollar LIBOR were allowed to be published. It is uses as a benchmark. It is used as a benchmark to settle trades in future options, swaps, and other derivative financial instruments in over-the-counter markets and on exchange globally. It is used for commercial products like floating rate certificate of deposits, variable rate mortgages, etc., and also consumer lending products including mortgages, credit cards, and student loans, among others, to use it as a benchmark rate. What is the need for the global transition from LIBOR? We have reliance on banks. The current flaw in the mechanism was that it relied heavily on banks to be honest with their reporting, disregarding their commercial interests. About manipulation in 2012, extensive investigations into the way LIBOR was set uncovered a widespread, long-lasting scheme among multiple banks to manipulate LIBOR rates for profits role in the 2008 financial crisis. The use and abuse of credit default swaps was one of the major drivers of the 2008 financial crisis, or we can say Lehman Brothers crisis. Also, rates for credit default swaps were set using LIBOR. What is additional transition benefits of India? Reduction in financing cost, potential to reduce the cost of financing in several ways, as a calculation of reference rates going forward will be more robust and transparent. Reduced borrowing costs, resultantly, lenders and investors may require lower interest rates or spreads, leading to reduced borrowing costs for borrowers. Moreover, customers and clients will be benefited from the elimination of LIBOR premium, which was typically included in their lending rates to compensate for the potential volatility and uncertainty associated with the LIBOR. And also, this will pave way for the more competition. The introduction of alternate reference rates may introduce more competition in the market for reference rates. This can lead to more transparent and competitive pricing of financial products. About the financial benchmark India Private Limited, which gives us before, uh, the financial benchmark India Limited, it is jointly owned by Fixed Income Money Market and Derivatives Association of India, Foreign Exchange Dealers Association of India, and Indian Banks Association. It was formed in 2014 as a private limited company under the Companies Act 2013. Its aim is to develop and administer benchmark relating to money market, government securities, and foreign exchange in India. Regulations: FBIL is regulated by the Reserve Bank of India. About its function, it is responsible for all the aspects relating to the benchmark to be issued by it, namely collection and submission of market data and information, including polar data, formulation, adoption, and periodic review of benchmark calculation methodologies, and calculation, publication, and administration of benchmarks. What is the India's transition scenario? Exposure to LIBOR or exposures to LIBOR are from loan contracts linked to it, foreign currency non-resident accounts, deposits with floating rates of interest, and derivatives. Alternate reference rates: the RBI has established a system of alternate reference rates that allows banks to choose rates from a basket of currencies rather than the British pound for international financial transaction. Then also RBI has added MMIFOR to the list of significant benchmarks administered by FBIL. And this MMIFR would be based on adjusted SOFR fallback clause. RBI has pushed for the insertion of fallback clause in all remaining legacy financial contracts that reference LIBOR or MIFOR. The fallback clause refers to an agreement for revised consideration when the reference rate is no more published, important for transparency and consistency. What is alternatives for LIBOR? We have US secured overnight financing rate, which is SOFR. We have European interbank offered. We have Euribor, and we have Japan's Tokyo interbank offered rate TIBOR. Then we have China's Shanghai interbank offered rate, which is Shibor, and we have India's modified Mumbai interbank framework outright rate, which is MMIFOR. MIFOR. Now we have liberalized remittance scheme. Under the RBI's liberalized remittance scheme, the finance ministry has included the overseas use of credit card by an Indian resident within the 250,000 limit. And RBI liberalized remittance scheme. The finance ministry has included the overseas use of credit card by an Indian resident within the limit of 250,000. About LRS current status. Until now, a provision of the Foreign Exchange Management Current Account Transaction, which is abbreviated as FEMCAT Rules 2000, excluded resident India's overseas use of credit cards during foreign travel from the 250,000 cap. Debit card transactions abroad are already accounted for in LRS. Also, demographic affected. The regulation will impact spending by high net worth individuals during foreign visits by reporting the details of such overseas spending to the authorities. Then, in foreign exchange management current account transaction rules, they have been brought out under the Foreign Exchange Management Act 1999. Under FEMA, all resident Indians are free to buy or sell foreign exchange for any current account transactions except for those transactions for which withdrawal of foreign exchange has been prohibited by the central government. About the background of LSR, the LRS scheme was introduced in 2004. The primary objective of the LRS is to liberalize the existing foreign exchange regulations and facilitate the smooth transfer of funds abroad by Indian residents. Under LRS, all resident individuals are allowed to freely remit up to 250,000 per financial year for any permissible current or capital account transactions or a combination of both. Individuals require the RBI's prior permission to make any remittance above this threshold. If they have to go beyond 250,000, they have to get the prior, permission from the RBI. This scheme is not available to corporates, partnership firms, hoof trusts, etc. The remittance can be made in any freely convertible foreign currency. What are the prohibited remittances and permissible remittances? In prohibited, we have for purpose specially prohibited under Schedule 1 or restricted under Schedule 2 of FEMCAT rules. For trading in forex abroad, capital account remittances to countries identified by Financial Action Task Force as non-cooperative countries, to those individuals and entities identified as posing risk of committing acts of terrorism, for gifting to another resident in foreign currency. These are prohibited remittances. For permissible remittances, private visits to any country except Nepal and Bhutan, gifts or donations, going abroad for employment, immigration, maintenance of close relative abroad, travel for business or a conference or a specialized training or for medical expenses, then studies abroad. Now, our third important topic of today's discussion is the insurance sector. Here we could see that the Insurance Regulatory and Development Authority of India which is abbreviated as IRDAI. Its chief said they are working to introduce a plan worked out with general and life insurance firms that he termed as Bima Trinity. About Bima Trinity, it will include following three components, which are Bima Sugam, Bima Vistar, and Bima Vahaks. About Bima Sugam, it is the platform to integrate insurers and distributors onto one platform, acts as one-stop shop for customers who at later stage can pursue service requests and settlements of claims through the same portal. Then we have Bima Vistar, a bundled risk cover for life, health, property, and casualties or accidents. Will have defined benefits for each risk that can be paid out faster than usual without the need for surveyors. Then we have Bima Vihaks carriers, woman-centric workforce in each Gram Sabha that will meet the woman heads of each household to convince them about benefits of composition insurance product. Then we have draft guidelines for Bima Vihaks. Here IRDA has issued draft guidelines for Bima Vihaks. Primary objective of the Bima Vihak guidelines are to establish a dedicated distribution channel focused on enhancing insurance inclusion and creating awareness in every Gram Panchayat. This aims to improve accessibility and availability of insurance in every nook and corner of the country. Guidelines define two types of Bima Vihaks. We have cooperative Bima Vihaks and the individual Bima Vihaks. In cooperative Bima Vihaks, we have legal entities registered under the Indian laws and engaged by insurers. In individual Bima Vihaks, we have appointed by an insurer or appointed by a corporate Bima Vihak. Then we have scope of activities assigned to Bima Vihak includes collecting proposal information, KYC compliance, coordination and support in policy claims related servicing and facilitating premium payment processes and others. Other measures proposed, we have state level committee and value added services. IRDAI is considering the formation of state level insurance committees collaborating with the state governments. These committees will devise district level plans to offer localized insurance solutions that cater to the diverse needs of the population. New value added services. IRDAI is proposing amendments to insurance laws that would enable insurers to offer value added services such as gym or yoga membership and nursing services. What is the current status of insurance sector in India? We have total premium in terms of total premium volume. It is the 10th largest market globally. India is the 10th largest market with an estimated market share of 1.9%. India is poised to emerge as one of the fastest growing insurance market in the coming decade. About insurance density in India, it has reached from 11.1 in 2001 to 91 in 2021 life insurance and 69 non-life insurance. About insurance penetration in India, it has been steadily increasing from 2.7% in 2000 to 4.2% in 2021. Insurance penetration in the life insurance sector was 3.2% in 2021, twice more than emerging markets and slightly above the global average, which is slightly above the global average. What are the intended benefits of the Bima Trinity? We have affordable bundled product that provides comprehensive health, life, property, and accident coverage to boost insurance coverage, bridging the existing protection gaps. We have streamlining claim settlements by the process and introducing differentiation in the industry and uh, catering to various geographic and population segments. About Insurance Regulation and Development Authority of India (IRDIA), it is under the Ministry of Finance, Department of Financial Services. It was formed as a statutory body under an Act of Parliament (IRDA) Act 1999. This mandate is to grant licenses to insurance companies and insurance intermediaries to promote interest of policyholders, to regulate investment of funds by insurance companies, professional organizations connected with the insurance business, to undertake inspections of conduct inquiries and investigations of the entities connected with the insurance business were entities regulated by regulated by the Insurance Regulatory and Development Authority of India. These life insurance companies, both public and private sector companies. We have general insurance companies that they are also regulated by it, both public and private sector companies. We have reinsurance companies, agency channel intermediaries like corporate agents, brokers, etc. They are all regulated under Insurance Regulatory and Development Authority of India. Now, one of the important topic is demographic dividend, as India enjoys the best demographic dividend. The working age uh, population of India is high right now, but still the problem is there is huge unemployment. We are not India, our growth uh, is not in proportion with our demographic dividend, as there is huge unemployment in our country. So about this we would discuss how it is important and what should have been done to get the benefit of it. Here we can see that unemployment rate highlighted in recent periodic labor force survey, which is a quarterly bulletin for the quarter January to March 2023. It has raised concerns about the ability of the country to reap the demographic dividend. We are not able to get the benefit of it. The unemployment rate among the youth in urban India fell during the fourth quarter of 2022-23, but it remained elevated at 17.3% against 18.6% in the third quarter. As we could see that states such as Rajasthan, Himachal Pradesh and the Union Territory of Jammu and Kashmir had over 30% unemployment rate in the fourth quarter of 2022-23. About demographic dividend, it refers to the economic growth potential that can arise from a favorable demographic structure within a population. It occurs when a country experiences a significant proportion of its population in the working age group, typically between 15 and 64 years. Relative to dependents 14 and younger, 50 to 65 and older, they are dependents. So if we could see that in our country right now, huge sector of our population are between 15 to 64, they are working, we are under working age group. So we should have gained much from it, but unfortunately we are not able to reap the potential. We are not able to uh, you know get the benefit according to the potential we have. Facts to highlight that India is in the middle of a demographic transition. Falling fertility rate is leads to better demographic dividend. Also, rising median age from 24 years in 2011 to 29 years now, and expected to be 36 years by average age would be 36 years by 2036. And also a falling dependency ratio expected to decrease from 65% to 54% in the coming decade, taking 15 to 59 years as a working age population. What are the mechanisms for growth in the demographic dividend? We have labor supply. There is an increase in labor supply. However, the magnitude of this benefit appears to be dependent on the ability of the economy to absorb and productively employ the extra workers. We have increase in savings as the number of dependents decrease. Individuals can save more. This increase in national saving rates increases the stock of capital in developing countries already facing shortage of capital, and leads to higher productivity as the accumulated capital is invested. We have also human capital decrease in fertility rates result in healthier women and fewer economic pressure at home. This also allows parents to invest more resources per child, leading to better health and education outcome. Also, increase in demand it is brought about by the increasing GDP per capita and the decreasing dependency ratio. Second demographic dividend. About the second demographic dividend. The first dividend occurs during the demographic transition process when the working age population increases as a share of the total population and the percentage of dependents decrease. In the first dividend, the working age of the population increases and the dependents decrease. In the second demographic dividend results from an increase in the adult longevity, which causes individuals to save more in preparation for the old age. We save more for our old age. This increase in savings can thus contribute to capital accumulation and economic growth. Whether the additional assets of older workers are invested domestically or abroad, national income will rise. In short, the first dividend yields a transitory bonus, and the second transforms that bonus into greater assets and sustainable development. Thus, if the right policies are in place, population aging can yield a second dividend on that one that can be long lasting and larger than the first dividend. Now, the another important topic, which is ruralization in India. You would had heard about the urbanization, people going to urban areas for in the search of job. Now, a term is usually mentioned these days. It is a ruralization in India. People from the urban areas are coming back to the rural areas. They are doing the farm work. They are so disheartened from the urban areas that they went back to their villages and they had started to do farm work, their labor work, or any other business, whatever was possible. And this is not good for the growing economy, for the industrial economy. So let's discuss about it. There have been some claims that rise in urban unemployment is forcing a structural shift towards ruralization in India. In general, as I mentioned, ruralization refers to opening of rural areas to renew rural generations, jobs, and farms. However, in a developing country like India, such trend is considered akin to industrialization. It refers to situations where the productive capacity of the economy is distorted, workforce shifted to rural India, and low industrial growth point to rising poverty levels. It is opposite to the virtuous cycle of growth. About virtuous cycle of growth, we know that the productive employment and income people get, they shift when productivity increases, employment increases, and income grows, the poverty decreases, and the progress in this leads to progress in economy, and this further leads to urbanization, and in after urbanization this leads to rise in investment. But this ruralization is the opposite of that. This would They would shift to the rural. The progressions in economy will decrease, poverty will increase, and productive employment and income will also decrease according to this. What are the indications of ruralization? We have chronic lack of private investment. Share of private fixed capital formation has continued to decline from 10.8% in financial year 19 to estimated 8.4% into financial year 22. So private investment has investment private fixed capital formation has decreased. During the same period, share of public capital formation has risen to 9.5% of GDP in financial year 22 from 6.5% in financial year 19. Also, persistence of employment problems. RBI survey of urban households indicate that both employment and income situations have improved since COVID-19, but they remain weaker than pre-pandemic and 10 years back, resulting in worsening of per capita income amid the rising cost of also, workforce shift towards agriculture. India's workforce dependence on agriculture has risen from 42.5% to 45.5% in 2021-22, and the real agricultural GVA has grown at 3.8% on a 3-year base is higher than the 3.2% real GDP growth. Demand for cereals rising again. India's monthly per capita consumption of cereals contracted by 1.7% annually from 12.9 kg in 93-94 to 10.4 kg in 11-12. But that trend has reversed as reflected in the GDP expenditure series on cereals and bread. Fall in industrial production growth in the US has improved, but India's industrial growth fell to a 10-year average of 2.1% compared to 7.7% during 2000 to 2012. What are the certain initiatives taken that can avert the trend? We have protection linked incentive PLI schemes across 14 key sectors. We have PM Nidhi to provide working capital loans to street vendors vending in urban areas. We have PM Gati Shakti transformative approach for economic growth and sustainable development. We have Din Dayal Yodhya Yojana, National Urban Livelihoods Mission to reduce poverty and vulnerability of the urban poor households. We have Credit Guarantee Trust Fund for micro and small enterprises to provide collateral-free loans up to 1 crore. We have Pradhan Mantri Mudra Yojana collateral-free loans to MSMEs. Now, our another important article is food storage in India. The Union Cabinet approved the Constitution and empowerment of an interministerial committee for the facilitation of the world's largest grain storage plan in the cooperative sector. Schemes identified coverage are Ministry of Agriculture and Farmers Welfare Agriculture Infrastructure Fund. We have Agriculture Market Infrastructure Scheme. We have Mission for Integrated Development of Horticulture. We have Submission on Agriculture Mechanization. The Ministry of Food Processing Industries, we have Pradhan Mantri Formalization of Micro Food Processing Enterprises Scheme, Pradhan Mantri Kisan Sampada Yojana. We have Ministry of Consumer Affairs, Food and Public Distribution Allocation of Food Grains under the National Food Security Act and procurement operation at minimum support price. By these schemes, we can the government uh, has initiated in world in grain storages. What is the aim? And the plan focuses on strengthening food security, reducing wastage, and empowering farmers by creating godowns and agricultural infrastructure at the primary agricultural credit societies level. Then we have implementation and inter-ministerial committee will be constituted under the chairmanship of the Ministry of Corporation to ensure timely and uniform implementation of the plan in a professional manner. The Ministry of Cooperation would implement a pilot project in at least 10 selected districts of different states. About food grain management in India, total production in India produces about 3,000 to 3,100 lakh tons of food grains a year. Food grains procurement mechanism, centralized procurement system. The procurement of food grains in central pool is undertaken either by the Food Corporation of India directly or by state government agencies procuring the food grains which had over the stocks to FCI, which is Food Corporation of India. Then we have decentralized procurement scheme introduced in 1997-98. Food grains are procured and distributed by the state governments themselves. About distribution of food grains, the central government through FCI has assumed the responsibility for procurement, storage, transportation, and bulk allocation of food grains to the state governments. The operational responsibilities, including allocation within the state, identification of eligible families, issues of ration cards, and supervision of the functioning of fair prices shops, etc., rest with the state government. Here we can see sustained increase in food grains production in India. For red lines it is oil seeds and for blue lines it is pulses. Black is dominated by the total food grains. We could see in 2014 from 2014 how it has increased. uh, in 2016 it increased, then after 2016 it decreased a little bit and remained static in 2018. Then again in 2019 it rose from 2019 to 22. It has been rising continuously. What are the government initiatives for augmentation of grain storage capacity? We have national policy on handling and storage of food grains 2000 to reduce storage and transit losses at farm and commercial levels, and to modernize the handling, storage and transportation system of food grains in India. We have Gramin Bandharan Yojana. Subsidy is provided for the construction, renovation of rural godowns to create scientific storage capacity. We have the Warehousing Development and Regulations Act 2007. It made the warehousing receipt and negotiable. And we have Private Entrepreneurs Guarantee Scheme to augment the storage capacity of FCI in private partnership model, PPP model. Mode. And we have PM Kisan Sampada Yojana for development of cold storage facilities, specialized packaging units, warehousing facilities, and others. Now, the last topic of today's discussion is TEAS 2.0. The government, it is we could see it here that the government approved the second phase of the city investment to innovate, integrate, and sustain cities project. It is the part of smart city mission. Cities or the city investment to innovate, integrate, and sustain is a sub-component of the government of India's smart cities mission. It was launched in 2018. Cities 1.0 was launched in 2018 and component of Cities 1.0 12 city level projects, capacity development activities in the state of Odisha, promoting integrated urban management at the national level. Agencies involved cities. It is a joint program of the Ministry of Housing and Urban Affairs. Agencies fund case the development AFD. Then we have credit credit transtalt for Wedru Fabu, which is KFW abbreviated as, it is German. Can never abbreviate I can never pronounce it such names. Then the European Union and the National Institute of Urban Affairs. The program is being coordinated and managed by the Program Management Unit and the National Institute of Urban Affairs in New Delhi. About aim of the program is selection of cities. The program assists selected cities to develop and implement innovative and sustainable urban infrastructure projects. Holistic approach. The selected projects will improve sustainable mobility, increase the amount of public open space, implement ICT measures to improve e-governance, and introduce social and organizational innovation in low-income settlements. Then we have support diversity. The selected cities receives financial support, technical expertise, and capacity building to implement their projects successfully. So the aim is selection of cities, then holistic approach and support diversity. About the phase two of the cities, additional objective is that the program envisages supporting competitively selected projects, promoting a circular economy with a focus on integrated waste management at the city level. Then we have climate-oriented reform actions at the state level and institutional strengthening and knowledge dissemination at the national level. So this is about the phase two of cities. Its additional objective is the program, and it envisages supporting competitively selected projects, promoting a circular economy with a focus on integrated waste management at the city level and climate-oriented reform actions at the state level, and institutional strengthening and knowledge dissemination at the national level. Then number of cities it will be implemented in, cities selected based on competition. Funding a loan of rupees 1,760 crore from AFD and KfW, which is German company, and a technical assistance grant of rupees 106 crore from the European Union. Three major components are financial and technical support for cities to develop projects on climate resilience with a focus on integrated waste management. All states and UTs will be eligible for support on demand basis. Interventions at the three levels center, state and city to further climate governance in urban India. About the thematic focus area, it is sustainable mobility. We have public open spaces. We have social and organizational innovation in low income settlements. Then we have urban e-governance and ICTs. So this is for today. I guess I was able to give you the information. I'm not saying that I was able to explain you properly because I myself knew that I'm not able to explain these concepts in detail because my focus is to deliver the information right now. This is not the explanation uh, period. I My aim is that you should get more relevant topics which you need to discuss. If you can pause these videos, the information given here is accurate and that may be helpful for your exam. So what I want from your side is please subscribe to my channel. It will motivate me. I will make more videos. I will improve over it, and trust me, after 1 month I would not be teaching in the same manner. From as I had promised you guys that from the 1st July I would take up this subject wise topics. First I would try to I would take up the prelims to 2025 target, in which I would teach here only five main subjects, which will include polity. There would be proper teaching, proper discussion of all the important, according to the syllabus of UPSC. Then I would take up the history. After that, I would take up economy. Then after that, I would take up ecology and environment and science and technology and also international relations. These six subjects I would complete it before the month. I think from July till March 2025, I would complete all these subjects, and with that, we would discuss daily current affairs, daily news analysis from Hindu and Indian Express daily, and also I would take up 10 to 15 questions which would be related to current affairs, previous year questions, and the static guesses. After understanding the UPSC paper, we can make major guesses how the next year's paper would come. So regarding that, we would take up every day 10 to 15 questions. There would be proper discussion over them. So uh, there is hope. So stay with me, trust me, and do your work. Everything will be fine. So best of luck to you guys. I hope you succeed in your life. May God bless you. Thanks for staying with me.